Are you struggling to understand how to trade using smart money concept? This video is for you. In this video, I'm going to give you steps on how to trade with smart money concept and how you can actually make money from the financial markets using smart money concepts. What's up guys, welcome back to the channel. This is still me, Solomon Wisdom, aka Born to Trade, and if you are new to the channel, please consider subscribing to this channel. On this channel I teach smart money concepts and how to make money using smart money strategy. So if you want to see more of my content, consider subscribing to the channel. Smart money concept is simply trading with the institutions, that is following institutional footprints to make money from the financial markets. Okay, you know the big banks move the markets, and the best way to trade is following their footprints. To be at the right side of the market, you need to follow institutional footprints. Now let me teach you how to trade using this strategy. Before you start thinking of how to trade with this strategy, one of the basic things you need to understand about this strategy is understanding market structure. You need to understand how to read market structure. Let's say we see price giving us movements like this. So looking at this here, you already understand that price is in a downtrend, and over here we got a change of direction, which tells us that the trend has changed. So this is how market structure looks like. This is just the textbook example of what market structure look like. So from here you can see price broke structure to the downside, broke structure to the downside, and when you see price breaking structure to the downside, it tells you that the price is in a downtrend. You know, this is your lower high, this is your lower low, your lower high, your lower low. It tells you that price is in a downtrend. We are in a bearish market over there. So when you start seeing price breaking above our lower high, this tells you that price is about to change direction, and this is what we call a change of character, which tells us that price is about to change direction. That is, price starts breaking above these lower highs, and you now see price breaking above these higher highs and this higher high. It tells us that price has changed direction. That's we switch from a bearish market to a bullish market. So when you understand how to map out market structure, the next thing you need to focus on is how to identify your supply and your demand zones, or how to map out your order blocks. Understanding this concept will really put you at a better side of the market. Without wasting much time, let's dive into the charts. Let me explain this quickly, and there are other few concepts you can add up to build high probability trading setup. So what can we see from here? Over here we can see that price is in a downtrend. You can clearly see it, that price is trending down from here. And what can you see price doing? You can see price breaking structure to the downside. You see price break structure and close below this lower low. I hope you can see that. This tells you that we are in a downtrend. Over here we got some kind of range, but you can clearly see that price equally breaks below, closing below this lower low. It tells you that we are still in a downtrend. Over here we got a pullback. You can see the pullback that taps into a zone over here, and after the pullback, price mitigated the zone. Now price pushed lower, breaking below again, which tells you that we are in a downtrend. So when you see price doing things like this, this clearly explains that we are in a downtrend. And over here we got a little pullback that fueled some inefficiency. Right here it fueled imbalance, and price pushed lower, closing below this low. You see that it tells you that we are in a downtrend. And what can we see from here? After price broke below this low, you see price pushing higher right now, breaking above this lower high. So when price broke above our lower high, it tells you that price is about to change direction. This is what we call a change of character, because price has now break below our lower high. Looking from the price action, you can see from here, you can see that price didn't violate our lower high. You can see it, price will always pull back and continue lower. It will pull back, continue lower, pull back, continue lower, without violating our lower highs. You can see that price was closing below our lower highs, and over here what do we see? We see price breaking above this lower high, which tells us that price is ready to change direction. You see how price pushed with this kind of candle. You see multiple bullish candles which close above this lower high. This tells you that price is about to change direction, and you can see price continues to move higher breaking above this previous high again, which is another break of structure. So when you identify things like this simply explains that price is about to change direction. So when you see price do things like this on the price chart, what you want to do is to map out your order block or your supply and your demand zone. So in this case, what we'll be mapping out is our bullish order block. That is, we're mapping out a demand zone, because looking at this, you see how this candle moved. This is our institutional candle, because you can see how price moved and break these structures. So you identify this as your institutional candle. Institutions have stepped into the market. I hope you can see that this candle, when you see this kind of candle, it tells you that institutions have stepped into the market. So what we want to do now is to map out our demand zone. Our demand zone is the last down close candle before momentum kicks into the market and break structure. So that's our demand zone, but this zone can actually be defined. So since this bullish candle here didn't close above this bearish candle, so we can actually refine the zone down to this candle. Okay, so what you want to do when you see this is to extend your zone and wait for price to return back to your zone. And another thing that makes this particular setup a valid one is when you move to your higher time frame, you will see that price left an imbalance over here. You can see that price left an imbalance over here, which needs to be filled. Okay, I hope you can see that we have a 4 hours imbalance, which price we actually come back to fill when we are waiting for price to return back and mitigate this zone. So if you are totally new to smart money concepts, when price returns back to our zone, what it's actually coming to do is to mitigate the zone. So when we are actually waiting for price to come back, you see few people were induced into taking early buys over here. So people will rush into taking early buys over here, and what can you see? Price returns, manipulates them out of the market, and now you can see price taps into our demand zone. And this is the most important part, because this is where we're waiting for price before we get involved in a trade. You see this first move right here. If you are trying to trade with smart money concept, this move here, most times you don't catch this move, and we are not interested in catching this first move. What you are waiting is for price to actually return back to our zone. So if you want to trade with smart money concept, you want to build your strategy around these concepts, you need to have patience, because sometimes we do see price take a lot of time before returning back to our zone, and this is totally based on your trading style. It's totally based on the time frames you use. I use 4 hours and the 2 hours time frame. So in some cases we do see price take some days, sometimes price takes weeks to return to our zone. Those that move lower to smaller time frames, they do get trading setups more quickly than we that move to the higher time frames to look for trading setups. Okay, now what we can actually see from here is that price is now in our demand zone, and how can we get involved in a trade? So people have different ways of getting involved in a trade. Some people use what I call risk entry in getting involved in a trade. Some use confirmation entry. Some use Wyckoff pattern to look for entry. People have different way of trading this. Some take 50% of the demand zone or the order block, waiting for price to tag them into a trade. But I'm going to teach you my personal style of trading this. That is how I get involved in my trade. I'll teach you that style today. And when I say risk entry, what do I mean by risk entry? Risk entry is basically when you map out your zone, you wait for price at the zone, you can just set and forget. Just set your order and extend to the highs, because what you'll be targeting is this high. You'll be expecting price to break above this high. That's the main target. Sometimes you can actually take partials on your way to here. When you move to the lower time frames, you will see that clearly. This is what we call risk entry. That is placing your order at the zone, or some might take 50% of the zone depending on how you trade, waiting for price to tag you in. So in this case, if you use the 50%, you wouldn't have gotten involved in this trade, and if you're actually placing your order at the zone, you would have gotten involved. And one of the disadvantage of using this type of entry pattern is most times you do see price coming to spike below our zone before moving to the direction. So what I would advise you to do is to use the same pattern I use, which is what I call using the confirmation entry. And how do we use confirmation entries? Confirmation entries is simply moving down to your lower time frames to look for entry confirmations, that is to see reasons to see the market structure in lower time frames, which will actually tell you that price is about to change direction. So that is basically what confirmation entries is all about. So let's go down to the 15 minutes time frame. Let me show you quickly. This is the lower time frame. So you can see this is still our demand zone. When we try to read the market structure on the lower time frame, what you can actually see from here is that price broke structure. This is a break of structure over here. This is a big break of structure. The price barely closed below. So this is a break of structure, and over here we equally got another break of structure. So it will be more visible when you go down to the 5 minutes chart. So what we'll be expecting price to do right now, you're expecting to take a bullish trade. So we'll be expecting price to break above our lower high before we can actually get involved in a trade. So if you think this first lower high is not really visible, you can actually wait for price to break above the second one. So in this case, anyone you chose, you would have gotten involved in this particular trade. No matter the style you use, if you wait for price to break the second one over here, you would have gotten involved. And if you actually waited for price to break this first lower high here, you would have gotten involved in the trade. So what can we see? Let me explain quickly. When price returned back to our zone, from here, from the movement and the breaks, you can see that price is breaking structures to the downside, which tells you that we are still in a downtrend. And over here, you see price moving higher and it breaks this lower high. This is exactly what I showed you guys on the higher time frame, where you see price break above the high, which I explained that it signifies change of direction. Hope you can clearly see that. Okay, now you see price break above this lower high. What you want to do is actually identifying your lower time frame demand zone, and looking from here, you can see we have a demand zone over here. And what can you see? Price returned back, feel some inefficiency. You can see it's very little, and now it mitigates the zone. So if you took the first low, we are actually waiting for price to break this low and come back to mitigate the zone, we are in a trade right now. And how you get involved is simply identifying this your lower time frame zone and place your order right there. You can now target the highs, and you can actually take partials around these lower time frame zones, because most times they are very reactive. You see them reacting like this one over here. You can see price expected it, we got a pullback before we get a break. So most times I take partials at those zones. Now if you're actually waiting for price to break above the second lower high, which is more clearer and more visible, okay, what you see is that when price was moving, this was where we got a clear break, mapping out the market structure from the wick to the body of the candle. Let me do it properly so you don't get confused. Okay, so mapping out from the wick of the low after the pullback to the body of the candle, you can see price now breaks above the low, which is more clean and more visible break of structure. And now you can map out your lower time frame demand zone. You can see the candle has a lot of imbalance, which price came back, filled the inefficiency, tap into our zone, and now we are in a trade. Okay, so this is the pattern I use, waiting for lower time frame confirmations to take a trade. And one of the importance of waiting for these lower time frame confirmations is that it gives a better risk to reward ratio. Yeah, once, because you'll be using a more refined zone. Trading with this demand zone on the higher time frame, measuring the zone, you can see that this zone has about 35 pips, which is very, very large. But measuring the zone we are using on the lower time frame, you can see we have this first zone is about 8 pips, and the second zone we have about 10 pips. So this is the best way to trade smart money concepts, going to the lower time frame to refine your zone. And looking from here, you can see price return taps into our zone, and you can see the movement of price to our targets. So what you can clearly see from here is that price break above our highs, and now price starts to reverse. So I hope this video was helpful. This is how to trade with smart money concepts, and I believe with the knowledge you've gotten from this video, you can go ahead and learn more with the videos on this channel. if you check out this channel, I have a lot of videos explaining how to trade with smart money concept, so you can check them out and you can actually build on that. So thanks for watching the video, and if you are totally new to the channel, please consider subscribing to the channel, because I guess you got value out of this content. So consider subscribing to the channel if you want to see more of this content. So this is still me, Solomon Wisdom, aka Born to Trade, and thanks for watching this video.